Hi, I'm Keith McCullough. Welcome to our new partnership with Seeking Alpha. It's a really exciting partnership. We call this a contributor call. So what we're trying to do here is effectively do what we do at Hedgeye, which is have an intellectual and a thoughtful debate about a best idea. So what we're trying to find within the Seeking Alpha network is some of their best ideas. And what we have today is a very good fund manager in Ben Axler to talk about a short idea. It would be remiss if we didn't start with something bearish here at Hedgeye. Talk about a short idea that is called iRobot. So first, Ben, I'd just like to thank you in doing one of the first ones that we're going to have on this.
Thank you very much. It's my pleasure.
Yeah, it's an interesting idea. It's certainly not one that people don't have strong feelings about. The stock has like 28% short interest. It's this kind of storytelling type of a stock. But maybe first, if you want to just take the opening volley in terms of what the sales issues are or what the forward-looking outlook is for this company relative to expectations.
Sure. I mean, I think iRobot traditionally has two businesses, their military business and their home robotics business. The company's been fairly open about some of the challenges they've had in the military business, and they've pinned their hopes a lot on the home robotics business. Mm-hmm. The issue here...
Home robotics being like vacuum cleaners?
Vacuum cleaners, that's correct. The issue here is that the product has become very competitive. There's been a lot of new entrants, low-cost entrants from China, for example, as well as new bigger players that are rumored to come into the market, such as Dyson, which does over $2 billion of revenues and is vastly profitable. So that's going to continue to put a little bit of pressure. The street's looking for double-digit, earnings and sales growth, which we think they're going to be a little bit challenged to hit for this year. They guided down slightly for Q3, which implies a very strong Q4 to hit the full year numbers, which have been aided by a lot of one-time gains. And the company makes a lot of accounting adjustments.
The accounting's sketchy. It's back-end loaded, so that's what we know. And Dyson is not yet at market, or where are we at on that competitive
That's correct. They're expected to make an announcement this Thursday. And the general view is that they're going to enter the robotics market. They put out a little bit of a teaser. But with Dyson, there's also Samsung, LG, a host of smaller competitors in China that are saturating the market at much lower price points.
Yeah, in your report you said, look, there's 20 competitors and Dyson's a huge one, and at the end of the day that's going to create pricing pressure. But at the end of the day they've also gone back and said, hey, we got this, like I've seen this 1,000 times. Oh, don't worry, the domestic market comes under pressure. We're going to go to China.
Correct.
So what do you think about that?
Well, it's very interesting. I was actually in China and did my own channel check. So I went to the three largest retailers there, Suning, Sundan, and Gome. And I spoke with some of the salespeople and saw the products sitting on the shelf at $1,500 US. Right. Well, to put this in perspective, the average Chinese individual makes about $300 a month. So we're talking about a purchase that amounts to something of 20% of an individual's annual income. So there's it's definitely at the high end.
That's like the craziest thing I've heard so far. I mean, and Chinese people don't exactly have these McMansions either to sweep up, do they?
Well, no. I mean, there is certainly the Chinese are getting wealthier, and there's this emerging middle class, but still. The product's out of reach, and what I found is it's just it's not resonating with the customer there. And the other reason is that the apartments there tend to be very small, in the order of 200 square feet, with a family of maybe 2 or 3 living in there. So the value proposition to buy a robotic vacuum at a $1,500 price point is a stretch for the average consumer.
I mean, it's like get a broom, man. I mean, at the end of the day, that's very obvious. I mean, again, there's components to this that I want everyone to be clear on. They're obviously very sketchy type components, accounting, going to China, et cetera. But if we can kind of tack that down with some numbers, if you look you in your slide deck, and everyone can get this from your website, it's fully downloadable. Mm-hmm. You spend a lot of time talking about channel stuffing and the DSOs. Can you go through that? Yeah,
I mean, look, it appears, you look at the numbers, and the DSIs have really gone up and remained elevated, and happened to coincide with the new CFO taking over and being appointed the head of the supply chain, which is very unusual for a public company.
I haven't heard of it recently, but you never know.
Exactly. And then, for example, this weekend, I went on to iRobot's website, and they were offering incentives to buy the old iRobot 650, the Roomba product. Now, the company just released the 880, so they're still trying to clear their own inventory of older models. You take that, I also did a channel check recently at Best Buy, for example, where the product sat right next to SodaStream. Again, older model, the 650. they're still trying to clear out this inventory, and I think it's evident, in the numbers in both the DSO, which remains very elevated, and the DSI as well.
And typically as a short seller, at least that's what I'm looking for. I'm looking for top line slowdown with some kind of margin compression. Margin compression, usually you look for an inventory build.
Correct.
So you're seeing that is what you're effectively
seeing that. We're seeing, also the company reports the gross margins for the home robots. Those ticked to a new low this past quarter. But even more worrisome with the financial accounting are things like one-time gains and reversals that they've used to meet Wall Street estimates. But you back them out and you find they've actually kind of missed the estimates very strongly.
Yeah. Well, this is where you get a new CFO and you point him head of supply chain and you make sure that he runs the numbers as he sees fit. But that to me is like the third wheel here. There's a gigantic component of storytelling in this stock. It's a very, I guess, widely owned retail stock. A lot of people are amped up, I guess, about their Rumba or Mumba or whatever the heck this thing's called. And you end up in a position where the big holders of the stock haven't yet capitulated.
I think that's right. In fact, the biggest, I was surprised to find the biggest holder is the XHB, the home building ETF.
Which is crazy. I mean, I short this thing all the time, so I actually get to be short iRobot through that thing. I don't like the home builders. I don't like the housing sector, but I couldn't believe it was in there.
I completely agree, and I think the average investor who's buying the XHB to own a home builder like a Toll or Lennar, they're actually buying a vacuum company that seems to have some challenges. So,
right.
I think if you start to see that ETF roll over, you're going to start to see more pressure on
Now, is that why I was just again going through kind of the risks to being short? To be clear, being short anything in this market is a risk.
Correct.
But I look at this thing, and BlackRock and State Street both own over 9% of the stock.
Correct.
Is that part of the ETF, or do they actually have analysts that like this thing?
I think it has to do with the ETF and some passive quantitative buying.
Really?
I believe so.
Okay.
I mean,
so there's no human that's actually saying, I love the iRobot. I love China. I love all of this stuff. In some of the top holdings here, there's a pretty concentrated effort that's just index-based.
I believe so. I mean, you look farther down on the list, and clearly there are some, long-only fundamental guys. But I think most of the bid in the market for the stock appears to be, some sort of passive index buying.
Yeah. Now there is, to be clear, and to be fair, there's Lord Abbott's in the top 5, and so is T. Rowe. They both do their work.
Correct.
But net, almost 50% of the stock is owned by 5 institutional firms.
That's correct, and I think that provides someone like me an opportunity to kind of roll up my sleeves and do some fundamental analysis to present to some of the large holders, and perhaps they calibrate their models and underweight the stock or decide however they want.
That is the exercise. I mean, when we go with somebody, we go to a customer and say we have a best idea and it's a short idea. What we're actually telling them is to just sell the stock. They're way too long of some type of a risk that they didn't know that they had. If you kind of look at that, has there been a capitulation recently from some of the people who have actually done their work on this, or is that the catalyst?
Well, I think some people are starting to realize the market's getting competitor, and we mentioned the Dyson issue, but the numbers I think speak for themselves. And I would also just point out to look at what insiders are doing. I mean, this is a company that was 60% owned by the insiders when it came public. Now, that's under 5%.
Yeah.
And how are the insiders also responding? They're increasing their cash compensation. So the incentive structure here has changed dramatically, and I think investors really need to think about this, particularly because iRobot's also frequently rumored as an acquisition target. But if you look and you say, well, why aren't insiders buying the stock? Why are they selling it?
No, I mean, they actually, in the first quarter when this stock went into the mid-40s, insiders sold the living daylights out of this stock. I mean, that's where they really got aggressive selling the stock.
That's correct.
So they didn't actually believe their own guidance, evidently.
I think that's right, and my personal feeling is they're going to have a tough time, hitting the guidance, and with a Q4 waiting, and new entrants into the market, it's going to create a bigger challenge.
Do you know how much this new CFO owns in terms of the stock?
I don't.
Or does he just get paid a big, greasy salary? And
I'm sure he gets paid a market wage and on some equity.
Because that's the other thing, and maybe it's one of the things to end on here. I mean, competing with insider sales, one of the top slides that you have is just and I love seeing this. One of our analysts, Kevin Kaiser, always does it with MLPs, showing the actual operating cash flow versus the reported net income. I mean, if that's not going to alarm you, I don't know what is.
Well, you raise a great point, and I first got my start as a short seller looking at Chinese investment scams. I exposed some relatively large ones, Camelot Information, $1 billion company.
Well, this isn't a $1 billion company right now.
No, but the consistent theme that I saw with some of these Chinese companies was a big divergence between GAAP net income and operating cash flow.
Exactly.
And what's really alarmed me is year to date, through the first 6 months, we've seen the biggest divergence on record, with iRobot. So there's been about a $20 million delta between GAAP net income and operating cash flow. So my takeaway is I really want investors to think about this, make their own decisions, of course, but clearly this is not the sign that you'd expect for a healthy, growing company.
Yeah, I would concur. And what I'd also like, and I think this is part of the idea between Seeking Alpha, and I'd like to thank you for doing the first one, we want to put this out there so that we can have a healthier debate.
Correct.
I don't find it to be very helpful personally to have somebody who's journalistically oriented, non-model driven, no experience, telling me that they just love the Roomba. Like maybe people find value in that, I don't. But I find a lot of value in just tacking it down, looking at the numbers, and then having a debate.
Correct.
So hopefully we can do that. We're going to obviously have access to Ben's entire slide presentation. It's at Spruce Point Capital. If you go to his website, you can get it there. You can also find us at Seeking Hedgeye. That's the new Hedgeye handle with Seeking Alpha. To give us any feedback whatsoever, I'm sure Ben would love to have it, and I certainly would too. Thanks a lot.